Investing should be akin to watching paint dry or grass grow. If you're seeking excitement, it's better to take $800 to Las Vegas. This quote encapsulates the risk of investing in index funds, which is a strategy that emphasizes steady growth over high-risk ventures. In our video, we'll guide you through the top 7 index funds which offer not only stability and simplicity, but also the potential for significant wealth accumulation, potentially leading to millionaire status over time. We will highlight a specific index fund that can potentially make you a millionaire in under 20 years. Additionally, we'll introduce several funds that have the potential to elevate your financial status to that of a multi-millionaire. Before we dive into the details, let's first understand what index funds are. Index funds are a type of investment that allows you to purchase a small portion of a large group of companies. Think of it as buying a slice of a large pizza. This group of companies is selected to represent the overall stock market. Therefore, when the stock market performs well, so does your investment. Investing in index funds is a straightforward and less risky approach because you're not placing all your bets on a single company. Instead, you're investing in a broad range of companies. Generally, over time, this bunch of companies tends to increase in value. Index funds offer a simple way for people to invest and grow their money without needing in-depth expertise in the stock market. Let's explore the 7 top index funds of this year. Each fund in our list has been carefully selected and ranked, with a focus on those offering potentially higher returns than the previous one. Starting at number 7, we have the Vanguard Total Stock Market Index Fund Admiral Shares, known by the ticker symbol VTSAX. This index fund boasts an average annual yield of 9.36%, offering a solid opportunity for growth over time. Additionally, it provides a dividend yield of 1.4%, enhancing its appeal for income-focused investors. A standout feature of VTSAX is its exceptionally low expense ratio of just 0.04%, making it a cost-effective choice for investors. Based on these metrics, if you continue with your investment strategy of $12,000 each year, you'll be on track to become a millionaire in 23 years. After this period, your portfolio value would be approximately $1,032,438. Over the course of these 23 years, your investment would be $276,000, plus the initial investment of $12,000, totaling $288,000. This represents an increase in value of $648,400. If you persist with this investment strategy for another 7 years in this fund, after 30 years, your total investment would be $372,000, and your portfolio would be valued at approximately $2,057,118. This demonstrates the power of compounding in long-term investment, where the value of your investment grows faster each subsequent year. The primary objective of this investment fund is to replicate the performance of the CRSP US Total Market Index, which offers a broad view of the US stock market, including a diverse range of companies from the largest to the smallest. The fund achieves this by investing in a variety of stocks to match the main characteristics of the index, such as industry types, company sizes, and essential financial details like stock prices and dividends. Historically, the fund has been effective at closely mirroring its target index. Next, we have the iShares Core S&P 500 Index ETF, identified by the ticker symbol IVV. This index fund is notable for its robust performance and strategic focus. It boasts an average annual yield of 9.8%, supported by a dividend yield of 1.7% and a very low-cost expense ratio of just 0.03%. If you follow an investment strategy of $12,000 annually, you can expect to reach your goal of becoming a millionaire in 23 years. By that time, your portfolio would be valued at approximately $1,110,885, which is almost $70,000 more than the previous fund we discussed. Your total investment would be $288,000 over this period, leading to an increase in value of about $726,885. If you maintained this investment approach for 30 years, your total investment will amount to $372,000, and your portfolio could be worth around $2,267,157, a capital gain of $1,895,157. This fund aims to replicate the performance of the S&P 500 index, a benchmark for large U.S. companies' stocks. The S&P 500 index measures the performance of large companies in the U.S. stock market. IVV employs a specific strategy for stock selection, choosing a collection of stocks that collectively mimic the S&P 500 index. This method seeks to match the size, industry type, and key financial aspects of the index. One advantage of this approach is that it tends to be more cost-effective and potentially more tax-efficient than actively managed funds with frequent trades. IVV commits to investing at least 80% of its assets in stocks that are part of the S&P 500. It may also invest in derivatives like futures, options, and swaps to more closely align with the index. This strategy ensures a close correlation with the S&P 500, offering investors a chance to benefit from the performance of major U.S. companies. At number 5, we have the Fidelity 500 Index Fund, recognized by the ticker symbol FXAIX. The Fidelity 500 Index Fund stands out in the index fund arena for its robust performance and features that are favorable to investors. It offers an impressive average annual yield of 9.91%, a dividend yield of 1.4%, and a low expense ratio of just 0.02%. Based on these metrics, if you consistently invest $12,000 annually, you're on track to reach your millionaire goal in 22 years. In that time frame, your portfolio is expected to be valued at approximately $1,573,000. Over these 22 years, your total investments will amount to $276,000, resulting in a substantial portfolio value increase of $724,573. If your contributions continue for 30 years, the total will reach $372,000, and your portfolio is projected to be valued at about $2,283,687, yielding a notable capital gain of $1,911,687. Similar to the previous index funds, this fund also focuses on tracking the S&P 500 index. It has consistently demonstrated a strong correlation with the S&P 500 index. Its strategy of closely mirroring the index has historically allowed it to replicate the performance of the benchmark quite closely. The fund's adherence to the index's performance, coupled with its low expense ratio, makes it an efficient choice for investors seeking market-aligned growth. An additional aspect to this fund strategy is the practice of lending securities to earn extra income, which can potentially enhance the fund's overall returns. This approach offers a slight edge over similar funds that might not employ such strategies, contributing to its attractiveness for investors looking for a bit more from their index fund investments. Now, we're delving into index funds that focus heavily on annual growth, offering the potential not just for millionaire status, but for multi-millionaire status. At the end, we'll introduce an index fund that can add over $8 million to your bank account. At number 4, we have the Vanguard Growth Index Fund ETF, recognized by the ticker symbol VUG. This index fund has an impressive annual yield of 12.74%, highlighting its strong performance in capital appreciation. It also offers a modest dividend yield of 0.5%, which contributes to its overall return. VUG is economically efficient with a low expense ratio of 0.04%. Based on these metrics, if you invest $12,000 annually, you could achieve your millionaire goal in just 20 years. Projections suggest that your portfolio will reach a value of approximately $1,092,351 in this time frame. Over these 20 years, your total investments will be $252,000, resulting in a remarkable portfolio value increase of $840,351. Should you continue this investment strategy for 30 years, your cumulative contributions will amount to $372,000, and your portfolio is expected to almost quadruple to an impressive $3,848,197. This growth would result in an extraordinary capital gain of $3,476,197 over 30 years, showcasing the power of long-term, disciplined investing. VUG aims to track the CRSP US Large Cap Growth Index, primarily composed of growth stocks from large US companies. These stocks represent a market segment known for its high growth potential. The fund's strategy is to replicate the target index by investing all, or nearly all, of its assets in the stocks that constitute the index, maintaining each stock in approximately the same proportion as its weighing in the index. An important aspect of VUG is its potential to become non-diversified. This can happen due to changes in market capitalization or index weighing one or more constituents of the index. While this might increase risk compared to more diversified funds, it also enables the fund to capitalize on the growth of its most successful components, offering a promising avenue for investors seeking significant growth in their portfolios. Next, we have the Fidelity NASDAQ Composite Index Fund, marked by the ticker symbol FNCMX. This index fund boasts an impressive average annual yield of 13.09% and a dividend yield of 0.6%, which enhances its appeal. Its expense ratio is 0.37%, which is fairly modest, especially given the specialized nature of the index it tracks. With an annual investment of $12,000, you could reach your millionaire goal in just 19 years. After 19 years, your portfolio is projected to be valued at approximately $1,741,000. During this period, your total investments would amount to $240,000, resulting in a significant portfolio value increase of $760,000. If you continue with this investment approach for 30 years, your total contributions will amount to $372,000, and your portfolio is expected to be valued at a remarkable $4,144,377. This translates to a capital gain of $3,772,377, firmly establishing you as a multi-millionaire. But could it be possible to double that in the same number of years? For this, stay tuned for the last index fund on our list. The Fidelity NASDAQ Composite Index Fund employs a strategy of closely tracking the NASDAQ Composite Index. This index broadly represents the stocks listed on the NASDAQ stock market, covering various sectors with a particular focus on technology and growth-oriented companies. The fund uses statistical sampling techniques to create a portfolio that mirrors the investment profile of the entire index. Factors considered include capitalization, industry exposure, dividend yield, price-to-earnings ratio, price-to-book ratio, and earnings growth. Additionally, the fund engages in securities lending, a practice that can generate extra income, potentially enhancing its overall returns. The fund may operate as a non-diversive fund, mirroring the diversification level of the NASDAQ Composite Index. This means it could hold a more concentrated portfolio due to changes in market capitalization or index weighing of certain index constituents. While this may involve higher risk, it also offers the potential for higher returns. At number 2, we have the Shelton Capital Management NASDAQ 100 Index Fund Investor Shares, identified by the ticker symbol NASDX. This index fund showcases an average annual yield of 13.69%, reflecting its strong performance. It also has a dividend yield of 0.4%, which contributes to its overall returns. The expense ratio is 0.63%, which is slightly higher than some other index funds, but the fund's performance and specific focuses often justify the cost. With an annual investment of $12,000, similar to previous strategies, you are expected to reach your millionaire goal in 19 years. Your portfolio is projected to be valued at approximately $1,066,200 over these 19 years. During this period, your total investments will amount to $240,000, resulting in an impressive portfolio value increase of $826,000. If you continue this investment strategy for 30 years, your total contributions will reach $372,000, and your portfolio is expected to grow to about $4,650,682. This would result in a substantial capital gain of $4,278,682 over 30 years. This fund aims to closely follow the NASDAQ 100 Index, which comprises 100 of the largest domestic and international non-financial companies listed on the NASDAQ stock market. The fund is passively managed, with the goal of investing primarily in the stocks that make up the index in such a way that each stock's weighing in the portfolio approximates its weighing in the index. Shelton Capital Management, the fund's advisor, strives to maintain a high return correlation with the NASDAQ 100 index, targeting at least 0.95 correlation. For the remaining 0.05 deviations, the fund is open to investing in securities issued by other investment companies if they align with the fund's investment objective. This strategic approach positions the fund as a strong contender for investors seeking to tap into the growth potential of leading non-financial companies on the NASDAQ. Finally, we arrive at our top-ranked index fund, the fastest route to becoming a multimillionaire. The Invesco QQQ Trust Series 1, known by the ticker symbol QQQ. The Invesco QQQ Trust ETF is highly esteemed in the investment community, particularly among those seeking high growth potential. This fund has a remarkable average annual yield of 16.61%. showcasing its strong performance and growth capabilities. It also offers a dividend yield of 0.5%, and the expense ratio of QQQ is set at 0.2%, which is quite modest given the high yield and growth opportunities it presents. Before delving into the potential earnings with this fund, let's understand why it performs so well. The fund is designed to follow the NASDAQ 100 index, similar to the previous discussed investment. It has consistently performed almost on par with the NASDAQ 100 index. The fund mainly invests in the stocks that constitute this index, giving investors an opportunity to benefit from the growth of some of the world's most innovative companies in sectors like technology, telecommunications, and biotechnology. One of the key attractions of this fund is its potential for high returns, thanks to its focus on high growth sectors. While this focus may lead to higher volatility compared to more diversified funds, it also offers the potential for significant capital appreciation, a major factor behind the fund's popularity. Now, let's look at the potential earnings from this fund. The metrics of the QQQ Index Fund suggests that with an annual investment of $12,000, you could be on a fast track to achieving your millionaire goal in just 17 years. In this period, your portfolio is projected to reach an impressive value of approximately $1,089,682. Over these 17 years, your total contributions will amount to $216,000, resulting in a remarkable portfolio value increase of $873,000. If you continue with this investment strategy for 30 years, your total contributions will reach $372,000, and your portfolio is expected to be valued at an astounding $8,518,165. This journey would result in a staggering capital gain of $8,129,865 over 30 years, highlighting the exceptional growth potential of the Investco QQQ Trust. This outcome demonstrates the power of strategic, long-term investment in high-growth sectors, a pathway that has been proven effective for those seeking to maximize their wealth potential.